Chris Conway from the Australian Stock Report live now from our Melbourne studio. For more on the broader market picture today, Chris, great to have your company on the show. Good morning. Let's talk the market because we're up about 0.8% today, so breaking a sort of losing streak we've been having of late. You still think we're going lower though?
Yeah, I certainly do, Ingrid. Good morning. Again, look, it's about, I guess, the banks which remained under pressure and the volatility in the commodity space. Obviously, we're seeing the iron ore miners high this morning despite the move from China and Vale overnight, which is a bit of a surprise. But yeah, still see the market moving into around 5,400. That's the technical support level, as I said, because some of those catalysts that had been driving the market higher recently are drying up, or in the case of commodities, too volatile to suggest that we're going to see a consistent move higher. So
you're saying it's a combination of the banks and the commodity space, not one or the other?
Yeah, definitely a combination. So there's no floor under the banks yet, I don't think. You know, just looking at some of the charts yesterday, things like Westpac off around 20% from the highs. There's probably a bit more in that. And yeah, as I said, the commodity story, the commodity prices remain particularly volatile. So I've said this for a while now, until we see some consistent commodity price increases, I don't think that's a sector of the market that you can really hang your hat on or expect to move higher over the near term.
So once we get to 5,400, in your view, what will be the catalyst to move higher?
Well, technical support there primarily, but it's at that point I think that valuations come back to the longer term averages and people start looking again more realistically at pouring back into value. So yeah, it's just we don't see much value out there at the moment. You know, there's certainly some names that will continue to move higher because they're such compelling stories, individual stories, but the market as a whole still looks a little bit overvalued, hence why I think there's a little bit more downside to come.
All right, let's talk James Hardie, one of the corporate stories out today. It's up close to 10% right now after its numbers. Got to mention though, investors of course love a special dividend and a share buyback all at once.
Yeah, look, a great set of results from James Hardie. Beat on revenue, expanded their margins because of the higher sale prices they were able to achieve, maintained their costs at suitable levels, and their outlook is pretty fantastic as well. They're expecting to see continued growth in the US, Europe and Australia, of course, their key markets. So yeah, look, an exceptional set of numbers from James Hardie. I guess the question begs now is, can James Hardie continue to move higher? And on the outlook, you'd suggest that they could. So yeah, still positives to come for James Hardie, and who knows, we might see the price get up to around the $20 mark.
You know, it's got this asbestos overhang, obviously, and those claims actually decreased on the back of the favourable Aussie-US movements for it. But is this still a risk? I mean, going forward, in terms of the currency moves, moving those claims, it is something you've got to keep in mind as an investor.
Yeah, most definitely. Look, I think the actual number of claims increased, but because of the translation effect of the weaker Aussie dollar, the value of those claims decreased. So, you know, it's all about what happens with the Aussie dollar there. If it continues to move higher, then that's going to negatively impact James Hardie. So definitely something to keep an eye on. But there's been a wealth of actuarial study that has gone into projecting just how much those costs are going to be. So they're fairly well known. So it comes back to the growth story for James Hardie. If they can benefit from those markets, those key markets that they operate in, that should override that impact of the claims.
Now, we'll be speaking about this a little later in the show with David Lennox from Fat Profits, but want to mention this China-Vale deal because it certainly does seem, you know, with all this talk about BHP and Rio at the moment and the iron ore inquiry being thrown up in the air, this is definitely relevant in terms of the supply story with China, sort of with this deal with Vale. Looks like supply, they'll be doing it for a lot cheaper now, Vale.
Yeah, absolutely. I think that one of the big things there was the ships that China have decided to invest in. 8, you know, massive ships capable of hauling huge amounts of iron ore, which will bring the costs for Vale down around 25%. That's the shipping cost. So that will, you would suspect, have a negative impact on the iron ore price. I think one of the things that's being lost in this deal, however, is that it highlights there's still massive demand from China. So much has been made recently of the supply dynamics. We all know about BHP and Rio Tinto deciding not to expand as aggressively as they had previously hoped to. What this deal shows is that there's still huge demand coming out of China, and that's the side of the equation that we haven't really focused on of late because, you know, there hasn't been any information to measure it off, I guess you'd say. So, you know, we've been focused on the supply side. We all know what's going on there, but now this deal from China shows that there's still massive demand there. I mean, China imports 1 billion tonnes of iron ore per annum, And this deal today highlights that there is still massive demand there. So I think that's part of the reason why, despite iron ore prices moving lower overnight, that we're seeing the local iron ore producers move higher today, because there's still deals out there to be done.
Right, but does this play out on BHP and Rio in terms of their competitiveness versus Vale, given the fact that China and Vale have this tie-up now?
Yeah, look, it definitely will. Like I said, it will put a downward pressure on the iron ore price, one would suspect, or at least cap it from further gains presently. And longer term, 6-12 months out, when that production does come online, absolutely it will have an impact. But now, I guess what you're looking for from BHP, Rio and Fortescue is if they can strike a similar deal. Again, clearly there's plenty of demand out there for iron ore moving into China. So it's up to those companies now to see if they can strike a similar deal, and if they can, well, they won't suffer as much as what they might.
All right, we'll talk about that a little later with David Lennox, but Chris, we'll leave it there with you for the moment. Thank you so much.
Thanks, Ingrid.
Chris Conway there from Australian Stock Report, live from Melbourne.